Hi there, you're watching Dukascopy TV. I'm Ben Jones. Bank of England Governor Carney speaks today, with many expecting him to address the pressing issue of the unemployment rate thresholds with regards to interest rates. If and when an interest rate change does occur, it will really shake up the currency markets. So joining me on the line for this edition of Forecasts to discuss the future of the sterling-yen pair is Charles Dumas from Lombard Street Research. Charles, your 1 month prediction for this pair is 173. What makes you think it will be at this level?
Yeah, well, in the short run, the yen-dollar rate is now down to about 102, and it was 105 before this little EM emerging market blow-up occurred, and there was a safety play into the yen arising from that, which we expect to unwind in the short run.
Now, in 3 months' time, you see the pound-yen pair getting increasingly higher, hitting 177. Can you explain your reasoning behind this?
Yeah, the reasoning remains a negative view about the yen more than anything to do with the pound. The basic point here is that the Japanese consumption tax increase comes through on April the 1st. The consumption growth that we're seeing at the moment will then fall away sharply, and the economy will be revealed to be growing very little. The inflation they're hoping to generate largely consists of the effects of the declining yen rather than any domestic inflation. And so we're expecting them to have to renew the depreciation of the yen and aggressive quantitative easing, and is likely to be announced in April after the consumption tax has gone up. So the result is that one's looking here for the yen going down significantly. As far as sterling goes, I expect the sterling to be marginally stronger against the euro and marginally down against the dollar.
And finally, in 12 months' time, you see this pair continuing to go up, reaching 190. What brings you to have such a bullish stance?
Well, it's not really a bullish stance about the pound. It remains a negative view about the yen. Our basic view is that the attempt that they are making there to achieve durable inflation of 2% will require that there is substantial further quantitative easing and devaluation of the yen, and that's what we're bodying here. And so basically I'm looking for the yen-dollar rate to reach 120 in a year's time, and the sterling to be slightly weaker against the dollar, though stronger against the euro, so sterling a little bit below 160. And take those two together and you get to the number which you just cited, which is 190 for sterling yen.
Charles, thank you very much for talking to us today. That is all for this Forecasts. Monica Gibson will be bringing you another edition on Friday, so click back.